Hello, everybody, and welcome to Study Journal episode 3. If you're new here, I already do have two parts up. The first one is about trends, the second one is about support and resistance levels. So I highly recommend that you check those out. It's posted on my TikTok playlist Study Journal and then also on my YouTube Built by Iz. So you can find both of those videos there. But if this is your first time here, basically this is a series where I just share how I was able to learn the fundamentals. I'm no pro, I'm no expert, but I just want to share how I learned in more of an easier way so that maybe it could help you out too. So hope you enjoy this. I hope you understand this. And yeah, I just want to give a free game because things could get confusing in this journey. But first, just to mention, I'm in the futures trading space. Whether you're trading options or futures, etc., this could be helpful. This is what basically forms an uptrend and a downtrend. And you need to know how to read these to understand how the market moves, what volatility looks like, where price action is, all of that. So I want to break that down, especially for those of you who don't know what a candlestick is, and that's completely fine because we all start somewhere, right? I want to go over what do candlesticks tell us? Like, what even is a candlestick? So if you watched my first part in the study journal, I went over an uptrend and a downtrend, right? We went over lower lows, lower highs, all of that. What makes a downtrend, what makes an uptrend. But within that, we have these candles, and each candle is representative of price action and movement. Like we said, movement and volatility in the market is formed by an uptrend and a downtrend, but within that, in that micro view, you have candlesticks, and each fully formed candle represents that price action in a specific time frame. So we could be talking in a daily time frame, in a 5-minute time frame, in a 1-hour time frame, etc. So once that candle is closed, it represents that price action within that specific time period and that duration. So let's go over the body of the candle because there's different parts of the candlestick that we're going to look at, and that tells us different things. The body of a candle, excuse my drawing, looks a little messy. So by the body of a candle, what I mean is this part. You see this big rectangular part here, this red one and this green one. Don't look at the wicks, just look at the highlighted part. That's known as the open and the close and that point of that specific time frame. So just looking at these rectangular parts here, just refer to that as the body. So anytime you hear body of a candle, that's just going to be the main part. Pretty self-explanatory, right? The body of the candle represents the open and the close. I know that sounds confusing right now because what do you mean by an open and a close? But we're going to go over how to read a candlestick. So let's start off with the bullish example and the bearish example. So once again, bullish means up, so an uptrend. Bearish means down, so downward movement is a downtrend. Let's start with the bullish example here. So this is a green candlestick, right? This is the body. We're just looking at the body for the candlesticks for right now. In this bullish example, you have your start point at the bottom of the candle and your end point is going to be at the top of the candle. Because the candle opens upward and it's bullish, it has a starting part right here. Because when a candle closes, it starts from the bottom and closes at the top. Just think of it as the movement going upward, and that's in a bullish candlestick. Next example, we have this bearish candlestick. Once again, we know that bearish means down, so because it would form that downtrend, it's going to start at the top. So think of it as filling the candle downwards, filling the body downwards. So you have the starting point at the top, that's the opening price, and it closes at the bottom because it's headed downwards, right? So think of these as opposites. It's easier to look at when there's more on the chart, but Once again, bullish is upward movement, bearish is downward movement. So in a bullish candlestick, it's going to open from the bottom, close at the top. In a bearish movement, it's going to open at the top and close at the bottom. But more than just the body, we have the wick of a candlestick. So I'm going to go over what a wick means and what that looks like because we just went over the body. This is a little bit of a better drawing. I'm very sorry about these ugly candles, but this one is a little bit better. So the definition of a wick is basically the representation of the highest and lowest price points during the period of time that the candle was forming. So that means that the price would have touched the very top and the very bottom of the wicks as the candle was forming before it closed. So like I said earlier, in a body of a candlestick, you have an open and a close, right? So that's the specific point of the candle opening and closing price. However, the wicks of a candlestick identify the high and low prices during that open and close period, if that makes sense. However, it didn't exactly close on those prices, right? So you have a high point and a low point, and again, this could be on any time frame. I want you guys to understand that the body of the candlestick is so much different than the wicks. You have an open and a close, that's your body. But for high and low points within pricing, that's your wicks. And that's the difference of wicks and candlestick bodies. Make sure you understand that the body of the candle is going to be more of like that volume, whereas the wick, it's thinner, so you could just associate it with it touched a high point here and it touched a low point here within price, but where it really closed is this body, right? I'm going to go over why wicks are still important even though it isn't the actual body, because it also does tell us more about price and the movement of the price action. So let me go over what that looks like. So it's important to know wicks, especially when you're looking at the length of the wicks. This is also known as like the tug of war for bearish and bullish candles. So in this bearish example here, right, we have a long wick that indicates that price got to a high point. However, it wasn't enough for the candle body to sit at the high point, which means that it ended up closing lower. And by this body of the candle sitting lower, it means that the final price close after those sellers overpowered the buyers. Notice how the body of the candle is not sitting high. It means that either sellers or buyers overpowered one or the other. So you're going to want to look at where the body of the candle sits, if it's higher or lower. And the same thing for bullish here, but the opposite example is you have this price that was all the way down, but it ended up closing bullish on top. The market shows that the bears stepped in just for a little bit, right? But it wasn't sustainable enough. So the bulls ended up overpowering the bears, and that candle closed higher on top. So notice how the bodies of the candles sit either higher or lower, right? And how that wick looks. You have a longer wick on the top here, right? But the candle is sitting on the bottom. You have this longer wick here at the bottom, but the candle is sitting on the top. So it's really important to note that. That's why wicks and the bodies of the candles are so important to note, because it does tell you about where price is going. And I just want to reiterate the reason why wicks are so important in relation to the candlestick body. The reason why is because you could look at a candlestick and understand that it touched a high point of price at one point in time, and it also touched a low point of a price in time, right? But the candlestick body tells you where it closed. It's really important to note where that candle closed, because you're going to look at the next candles and even the previous candles, and that shows the structure of the market, if that makes sense. So when you keep taking note of that, you could see where the direction is headed. And that's the reason why you're looking at the size of the candle body as well as the size of the wick and where that candle body is sitting on the wick, right? Lower or higher. And then I did want to go over this because you will see it on the charts. This is what a doji candle is. So straight off the bat, when you look at a doji candle, we could see that it looks different from a regular candlestick, right? Like, where is the body of this candlestick? There's barely any. So doji candles represent that there was a similar open and close price in a candle. It was like the price was undecided and it kind of was an even match. So price most likely did open and close at the same time, which is why that candle body didn't form. It's very much near the same price and it has little to no body. So if you do see that, just keep in mind that it's a price indecision or more of an even match with price. And that's why it doesn't look like a normal candlestick. So just keep that in mind also when looking at your charts. All right, and then I do want to go over candlestick heartbeat. This is just important to note, kind of like the main takeaway of why we use candlesticks and why we read them. But basically, each candlestick has this heartbeat and that pushes up and down as price moves. It is like the pulse and the breathing of selling and buying pressure, and it does freeze in time as the candle closes. So like I said, the candlestick represents the price opening and the price closing, and a candlestick shows that price closed, right? So it's every fluctuation of the market, and that makes the body and the wicks of the candle. So honestly, to make things easier, just think of the candlestick heartbeat as a pulse in the market. This is just an example of what a trend could look like, but I think that it looks like a pulse or a heartbeat. So if you want to associate that with candlesticks, be my guest. I feel like it just makes it a little bit easier. That's why I wanted to make that affiliation here. But it's basically the breathing of buying and selling pressure. So that's why candlesticks are so important in the market. You're going to be looking at them tons and tons. I'm going to show you this on TradingView right now so you could get a better picture. Also, because my drawings and images in here are not top tier. So let's go to a real chart. This is on a daily time frame and this is on MNQ1. So let's just pick a random candlestick here. First, I want you to understand that each candlestick on this time frame specifically represents a day, represents November 4th. This candle represents November 5th. Any time frame that you switch, the candle would be representative of that time period. So keep that in mind. Let's do this bearish candle right here. Let's identify the high and low price of this day and the open and close of this day. So for the high point, we have price at its highest point at this top wick, right? For the lowest price of the day, we have it at the bottom wick right here. So remember, wicks are representative of the high point and the low point of price. And then the body represents the open and the close. So also keep in mind, if it's a bearish candle and a bullish candle, it opens and closes differently, right? So in a bearish candle, it opens at the top and closes at the bottom. A bullish candle, it opens at the bottom and closes at the top. For this example here, it opens at the top at this price and it closes at the bottom. That is how you look at the candles on a chart. I hope that makes more sense. I know it could sound confusing at first, but the reason why you want to understand what that means in candlesticks is because when you zoom out, it shows this overall market structure. And that is why it is so important to understand what the candlestick body represents and what the wicks will represent, because when you switch to different time frames, the 5-minute, for example, each candlestick is representative of 5 minutes of time, right? But the more you zoom out, it has more of an overall structure and direction. Same thing on a 15-minute. And I'll go more into time frame correlation because that's also a very important topic, but it also is really good to know your understanding of what that looks like on a candlestick, because you are going to be comparing different time frames in order to take a entry, and that is going to serve as one of your confluences to enter a trade properly. So that wraps up Study Journal episode 3. I hope this helped you out with more understanding about candlesticks. Let me know if you have any other questions, but I'll see you in episode 4. And also, if you want to join that Discord, comment below and I'll send you over the link. I'll send you over personally just because there's so many bots and we don't want any in the server. But look forward to seeing you in the next part, and stay tuned for more concept breakdowns. I hope this helps. Bye!